Good evening. I'd like to welcome everyone to the Hurley Investments Market View Commentary for Tuesday. Actually, it's Monday, the 25th of February. I've done this for Tuesday for so many years, I'm having to change what I do. But welcome, glad to have you. Again, it's a smaller group, not a big worry. Hopefully you've enjoyed the last couple that I've given you so you can see how real it is. But what I want to talk today is in response to a couple emails I received from individuals who apparently have felt the way I have felt over the last couple weeks. So the short answer is, what do you do when nothing you are doing in the market is working? And it's kind of funny because all three of the emails I got literally said nothing is working. And with all due respect, not that I'm doubting what you're saying, but with all due respect, I doubt that nothing is working. Something has to be working. And again, that's why we collar trade, right? Because something has to be working. What do I mean by that? Let's get my desk the way I want it. Pretty simple, right? The stock, can't spell, makes money when the market and stock are up. The long put, man alive, sorry guys, just can't spell, makes money in bearish movement. And so I should say stop making some money in bullish movement. And you can use the short call in stagnant to bearish movements. So you kind of always have it covered. You do. In some way, shape, or form, you always have it covered. In a simple comment, if you can add shares, I'm going to change that down. If you can add shares when bearish, you have more explosive returns to the upside. And when most are just trying, for crying out loud, shouldn't touch my computer screen. When most are just trying to break even. And if I go to my core stocks, for those that lost more than 30% last year, I would have Apple, Baidu, Facebook, Ford. That lost 20% last year. Oh, hold on. Forgot about that one. Bank of America, Zions Bank. It lost more than 20% last year. Disney. And that lost 10% last year. In some way, shape, or form, it's not all of them. We had Visa. Now, if I went through and looked at some of my other positions, I could tell you definitely Under Armour, falls in 20% plus last year. American Outdoor Brands Corp actually falls in American Outdoor Brands Corp. And right there, and Under Armour is 40% off its highs. FCX, Freeport McMoran falls in that category. So I could just keep it right like that. I'll be honest with you, yes. There are times that I get frustrated. And it's with the market. It's with clientele that won't give the collar trade time to work. People that are looking at a drawdown but not calculating how much we made on the way up. Short-term thinking. You can't beat the S&P if you're in the S&P. Can't beat it if you're in a mutual fund. Anything that has fund, you can't beat it. Costs ridiculously too much, and there's no protection to the downside. I'm not saying that the market's easy. I mean, I'll be honest with you. I'm not saying the market's easy. And you know who else doesn't think the market's easy? Take a guess. Who else could I be talking about? Who else also doesn't think the market's easy? Lance, I love that you're here. My wife, of course not. How you must have been waiting to put that one in there. Of course she doesn't think it's easy. I found this very interesting. Warren Buffett has his annual letter that comes out. It seems like to me he's with CNBC a lot. But do you realize 2/3 of what he's got invested? I understood Ted and Todd each have about 1/3, right? I could be wrong on that, but that's what I understood. Warren Buffett says Ted Wilshire and Todd Combs have each held the S&P by a tiny bit since they joined Berkshire Hathaway as investors. So that's, if I understood right, like a 2010 and a 2012. So for 8 years, 2 hedge fund managers that can move the market, that get to purchase shares at a significant discount because of the quantity of shares that they buy, have not beat the market over that period of time. What does that make you guys think of when you hear that or you read that? What do you guys think about? Oh, Lance, you're killing me. But there's some hilarious one-liners. Lance says they suck. Seriously though, what do you think about when you read that? David W., that's surprising because they can move markets. I agree. You know what? Maud, with all due respect, Maud's my favorite for a second week in a row. Maud says, I'm thinking, Kevin, you are doing okay. Thank you very much. She's my favorite. I loved her last week, and I love her even more this week. Any other comments? David, so how are you ever expected to beat the market? That's a good question. Is it even worth trying, right? And Mary, I know you sent one of those emails, so if it's okay with you, I'm going to share just a comment from Mary. Mary made the comment to me that it seems like we're not beating the S&P 500 right now, which is due to last year. I did not beat the S&P 500 last year. Basically, as a net overall for the first time in 10 years since I've been doing this, but that she's felt protected, which is funny because I lost more than the S&P 500, but we weren't down that 30, 40 plus percent, 50% almost on Baidu, if not more. We didn't lose that amount. So she felt protected, which is interesting because that's the way I'm trying to approach today. You won't go through a 2008 where you'll ever lose half your portfolio. You won't ever lose 20% of your portfolio. And if I am losing 20% of your portfolio, you better have double the amount of shares. I'm not sure how to, well, so let me tell you what frustrates me on today. Disney was making it up. It really should at least go to 120. Has a huge lineup this quarter in movies where they'll walk away with at least $4 billion of free cash flow. They won 4 Oscars. Fox that they're buying won 7. Well, Fox that they bought won 7, so Disney pulled an 11, even more than Netflix. It's shocking to see it get up to 1580, even maybe a little bit higher today, and drop down and lose like it did. I knew at 115 it was a pressure point. I should have added some short calls today up at 120 when it was dropping down below 115. I couldn't find the reason for the drop. So let me ask you guys a question here. You can't day trade it. You'll get your butt kicked day trading it. But how much do you let the stock run? How much do you let it move within a range, just a range that's acceptable for you? We had 2 comments come in here. Sometimes it just seems that stocks, parentheses Disney, are not related to their fundamentals. Sometimes the stocks won't follow their trend, even though fundamentally they're supposed to. 2 women right there, Maud and Mary, both comments are right on. It shows you have a difference between the men and the women. The women are thinking about it and the men are just make a quick buck, right? I'm teasing you, David. I only say that because you're a day trader. At least you like having some day trading, so that would be fair to say. Yeah, I'll be honest with you. There's some new ads coming out that the stock market's been broken since 2008. I don't think it has. It's been different. It's been a new normal. It's been much higher volatility than the average. But I don't think it's broken. I don't think it's rigged against you. I don't think the stock market should be only for money managers to make money in. I do think the stock market is more volatile than it has pre-2008. I do think that you have to worry a bit on movements because we're way extended for a true correction. I know we had a 20%, but to funnel out all that we've done to our market and how we've propped it up, we probably do need a good 35-40% drop again. And I'm not sure when that's going to happen. I am kind of shocked that we're up as much and we haven't pulled back like we have before. It does disappoint me that we have a company like this that had fabulous earnings. Our stock market took off today, and it could only hang on to about a third or a fourth of its overall gains for the day. It bothers me that another company that I trade, like Baidu, will have a fabulous earnings and go down on it. And today it broke the 50-day simple moving average. It doesn't make sense. There are some things that fundamentally do not make sense. But it doesn't mean the stock market's broken. It just means it's a little more difficult than it was pre-2008. A couple questions came in. So let's take a look. A couple questions are, maybe isn't this because we're right at resistance, that the S&P couldn't break its resistance levels? Well, if we look at the Dow, we're a bit overbought. No real resistance level. We're just a bit overbought, technically speaking, looking at the RSI. Pretty flat. And obviously, big money has been in, and they've spent quite a bit. I do use that Williams percent R. It's more looking at institutional buying. It's a medium statistics. S&P 500. Almost overbought. I thought the highs today put us over 2,800, a round number. Let me make a quick check to see if I am correct. If I am correct here, come on S&P. The S&P 500, the SPX. Trade as high as 2813, so we were definitely over 280. 2,800, excuse me. But we do have some tops there at 2816, 2815, 2800.18. Again, though, I would think a China deal is big news, huge news. Puts the global GDP and world growth story back into play. If we're to go to the Nasdaq, same thing. Almost overbought. Taking a peek again. Hopefully you haven't thought the market has not been frustrating. In fact, one of the neat quotes that I have to agree with 100% is that sometimes the market can stay illogical longer than you can stay solvent. Sometimes the market will remain more illogical than your risk tolerance can handle. This takes time. To truly be good in the stock market, it takes time. And I don't know what that time frame is. I know sometimes it can be as little as a quarter. Sometimes it can be as little as as little as 2 or 3 years. Sometimes it takes 5 to 10 years. Obviously, for Buffett's guys, it's 8. Actually, it's 9 and it's 7 for those guys. Where's the market going to end? I'm going to say down. I'm going to say down because we have GDP numbers that come up on Thursday that we know are not going to be good, and I will expect an overreaction from the market. What does this mean for some of my positions? I don't think the bearishness is down, but I think I'm in a position to start to short some calls into March. Going to short some calls. I also would expect some stock selling to occur end of March, end of March, maybe beginning of April for the tax season. Now, I know taxes, if I understood right, are going to be extended out in time. So maybe that shifts the tax selling sell-off. And maybe that'll coincide with the China deal, which could really explode our markets by 6 to 1,000 points on the Dow. Maybe 60 to 100 points on the S&P 500. Where will the market end in March? I'll be honest with you. I think it's our pause. I think March is our pause where we just trade sideways, where we're going to build a base or we'll catapult ourselves higher. I can make a case while we'll come back 5 to 9% like we did last year in February. I can make a case for us to be up another 5% going into March alone. If you had to ask me, I would first say that we're most likely going to be flat. I don't have a technical reason or expectation behind it. I'm just going to tell you it seems like we've run out of buyers. And I would use today as my reason to say it seems like we've run out of buyers. All right. Earnings. We start our earnings this week on some retail. Dillard's was in there today. Mosaic, Shake Shack. Tomorrow, AutoZone, Home Depot, Macy's, and Toll Brothers. Pretty interesting. I should know the guy's name, and I'm having a blank. But the economist that's Bullard on CNBC this morning made the comment on, I think it's Stewart, right? That said it wouldn't surprise him with interest rates coming down, the stock market coming back up, that we're looking at having a pretty good home buying opportunity, which would be a good run for home builders where people can start to afford homes and kind of jump on the bandwagon that home interest rates are coming back down a little bit. Gives those people that feel like maybe they missed it the opportunity to come back. So I'll pay attention to Toll Brothers. I normally trade D.H. Horton, DHI, David Henry Indigo, but I will pay attention to Toll Brothers. Wednesday, Best Buys, Lowe's, Office Depot, TJ Maxx, Hewlett Packard, LB Brands, Monster Drinks. Thursday, Bud, and Anheuser-Busch, JCPenney, Crocs, JD.com, Dell, Gaps, Nordstrom's, VMware. Foot Locker on Friday. I'll pay attention to Foot Locker because I do trade Under Armour. Probably be a good time to get out of my bull put here in the near future. Internationally, PMI manufacturing numbers on both Wednesday and Thursday. The CFLP, which is not China run, the China data ones are on Thursday. I'm going to skip how I'm looking to trade just for a second. But I was appreciative that Bullard said, hey, rate hikes, balance sheet reduction coming to an end. In fact, if you read through, he even says that it looks like we overshot, that interest rates are too high right now. Could you imagine what our market would do with an interest rate cut? That could be pretty bullish. It also could scare the crap out of the market. Watch the market freak out over that. Deutsche Bank lost $1.6 billion on a single trade involving Warren Buffett. I don't think they knew that at the time, but a single bond trade, $1.6 billion wiped out. And worst part about it is these are muni bonds. That's probably a big stake of California, maybe New York, that's going under this, becoming as I stutter through this, is solvent. These are muni bonds. These are cities. These are counties. It looks ugly. It looks real ugly when you hear that you're taking those kind of losses. And the worst part about it is you took it in 2016, or we're going to lose in 2016, and you pushed it off till the end of 2018. That is awful. And I hope Deutsche Bank gets the shaft for that one. Talked about Warren Buffett's managers. I did think this was hilarious as well. Warren Buffett says Bitcoin is delusional and attracts charlatans. Is there a better way to say it? It's a complete joke. If you're looking at my thoughts on Bitcoin and what I would think about it, the short answer is I couldn't have said it better. It's the kiss of death. If you've gotten lucky, congratulations, but please don't think Bitcoin is going to solve all your problems and make you millions of dollars. It just won't. It just won't. Here we go. I kind of found this article interesting as well. Samsung just announced the first foldable phone you can buy, and it'll only cost you $1,980. So out of curiosity, who's going to go and run out and buy a 2000 foldable Samsung phone? And Lance, you better not say you. I'll be honest with you. Ma just said nuts. And Lance, congratulations. Lance just told me, no way, Jose. Yeah, it's wow. You could buy an awfully good computer and a decent Apple phone for that amount of money. Nuts is a great way to say it. Kind of ridiculous. There was an article that I saw, and I don't think I put it out here, that Samsung is making the same mistake Apple is making by keeping a high premium on their phones, but by even going overboard. And this is their version of overboard, I'm sure. Kind of ridiculous. A $2,000 phone. LeBron James might be the one that buys it, and they might only sell two, one to the CEO and one to LeBron James. But a $2,000 cell phone, and this is coming from an Apple lover who has paid $899 for a cell phone. Wow, that is just insane and ridiculous. I don't get it. I don't get that one at all. I would really, I don't know. That one just shocks me. I don't have a good answer. That one just shocks me. All right. With that said, how am I looking to trade? I know past history doesn't guarantee future results, but I think the risk is to the downside, and I want a full collar trade to be in place. Short calls, long puts, we're at a tipping point. We're at a tipping point that's new, that's not understandable, that's not going to relate to past history. And because of that, I'm not going to sit here and talk to you as if I've got all the answers, because I don't. And I think all those people that do tell you they've got the answer all the time, that should be your answer, to run and run away as far as possible. The market scares me a bit right now. Doesn't mean I'm going to sell everything off. Doesn't mean I'm going to overprotect to the downside and change my deltas around to have a negative delta for this big drop. I'm not going to bet the farm on it. It just scares me. It just scares me right now. So I want to be in advantage to where I can pick up shares on the way down. I'm kicking myself for Disney today, and I don't want to kick myself anymore. With that said, I don't want to overspend on protection to the downside. So I'm making my best educated decision on how I'm going to be ready for a fall, but not throw all my cards on the table for that direction, if that makes sense. We watched it last year. Market moved too fast, too quickly. Everything fell down. We do have some more reasons, but a day like today showed me there was no staying power in our stock market. So I'm not going to act as if everything's okay and we're going to keep running to the upside. I just don't see that happening. Questions. I know we went a little quick today. Sorry about that. What questions do you guys have that I can answer for you? And Mary, I did not bring out your other question, but I'm gonna hold on and let you tell me if you want that one answered or not. So in Titan, I'm glad you're putting on full downside protection, and there's an interesting one. How far do you think the stock market will fall? So again, past performance is not a guarantee of future results, but we saw it in the past. It would not surprise me if we went down and touched around that 2,500 range. I don't think we're going to go all the way down to the lows of the year at 2443. I don't think we're going to need to test the lows of last year, but I do feel I could see a lot of our returns evaporate. And so in order to do that, farther out in time to protect, using a long put, a short call that'll pay for that long put, looking to protect us through May. If I remember right, aren't taxes due this year May 15th? Aren't taxes due May 15th? So if that's correct, I'd expect maybe things to get pushed out. It is typically April 15th, but I understood, Maud, that we were pushing taxes out. So let's find out. When are taxes due for 2018 calendar year? Thought the IRS has pushed them out. That's TurboTax. So come on, Hurley. I should just go to IRS, huh? IRS.gov. And thought because of government shutdown, they were going to take them to May 15th. So how about that? I will keep track of the tax due date. Is that what it might be called? So let me find out for sure. But actually right now it does look like for your personal returns, it is April 15th. I thought they were extending it out. I need to do my research on that. So I will find out and I will let you guys know. Any other questions? All right then. Hey, I appreciate you being here tonight. I will get this up later on tonight or first thing tomorrow morning. Kind of a smaller group. Hopefully this was helpful for you. Please keep coming and please invite some of your friends. If you're hearing some of the news that your friends are just going, oh, this is ridiculous. I do offer this for free for individuals. Anyone is welcome to come and attend these. Please send them on over. Please forward the link to them. And let's see if we just can't help everyone out this year. You guys take care. Have a wonderful evening. Tomorrow night we'll do the trade finding and adjustments, and I may have to switch Thursday, but I'll keep you posted. You guys have a good evening. Bye-bye.